Maybe you are that person who wants to earn some quick money with trading. Maybe you want to generate long-term wealth with investments. But whatever be your reason to enter the stock market, if you're going to lose all of your money on the first day, then please don't watch this video. But if you have the patience to learn and understand the concepts first, then welcome. You are at the right place. Today's video is going to be a little long and a little technical. So turn on the subtitles to understand it better. I have even left the timestamps in the description so that you can go back to a particular section you find difficult and watch it again. But don't worry, even if you're new to Zerodha or stock market, I promise that today by the end of this video, you will know everything about how to execute your first trade and how to make your first investment. Because in today's video, we're going to see how to quickly open a DEMAT account online using just your mobile phone. A quick tutorial where I'll show you some basic and some latest features of Zerodha's trading terminal KITE. A demo of how to buy and sell shares for trading. How to do long-term investments in the stock market. I have a quick announcement about a new course that I'm building for you. And in the end, I'll give you a bonus tip so that you understand what you need to do to make money in the stock market. There is so much to earn and learn today, including the latest and most useful feature of Zerodha called GTT. So without wasting any time, let's begin. If you've already opened your DEMAT account, then directly go to this minute to see how to buy and sell shares. But if you have not, then don't worry, because the best time to open your DEMAT and trading account is right now, because the entire process is online and simpler. You only need your mobile phone and 15 minutes. So let's start the process. First, take a photo of these three documents using your phone. Number one, your PAN card. Number two, your signature. Just take a plain paper, sign it and take a photo of it. And number three, your bank proof. The easiest bank proof is a cancelled check. Just take a blank check and write cancelled across it. Don't sign it and take a photo. If you don't have your checkbook, then you can even upload your passbook or bank statement. Don't worry, I'll show you where to upload these. Apart from these three photos, also keep your Aadhaar card handy because you'll need your Aadhaar card number during the registration process. After you have these four documents ready, then the Zerodha account opening process is pretty self-explanatory. And I've also partnered with Zerodha to get you an amazing deal. If you use the link in the description and open your Zerodha account, then you will receive these 7 trading and investment courses for free. So let's open your account now. Now that you have these 4 documents ready, it will hardly take 15 minutes. So go to the description of this video. Click on this link and enter your phone number. Confirm your phone number by entering the OTP. Next, enter your name and email ID. Confirm your email ID by entering the OTP you have received on your email. On this next screen, enter your PAN number and date of birth. Hit continue. If you just want to trade in equity, pay only 200 rupees. But if you want to include commodity, then you'll need to pay 100 rupees more. Select the payment option you like the most, UPI, card or net banking, and make the payment. On this next form, enter some basic details about your background like marital status, mom's name, trading experience, occupation, etc. And then click on continue. Next, you will see this link bank account screen. Here, enter your branch IFSC code, MICR code and your bank account number. Read the declarations, click on them if you agree and hit continue. Next is this webcam verification screen. Allow Zerodha to use your camera. Write that number you see on the screen, which is 2011 in this case, on a piece of paper. Hold that paper in front of your mobile and click on this button called capture. By the way, that's Kamini. She's from my team. She helped me with this account opening process because my account is already open and functioning. In fact, I'm going to show you my account when we are going to buy and sell shares in the next section. Next, you will see this upload document screen. If you remember, we took some photos at the start of this video. So upload those photos here of your cancelled check, signature and PAN. You don't need to upload your income proof if you are just buying and selling equity stocks. So I am skipping that. After uploading your documents, hit on the e-sign button. You will see this email authentication screen. After you click here, enter the code they sent to your email ID. Now, e-sign the document. On this form, read the declaration. Enter your Aadhaar card number, enter the OTP they've sent to your mobile phone and click Verify OTP. You will see a document like this. Check it out and hit Sign Now. You will come back to the screen. Enter your Aadhaar card number again. Enter OTP and hit Verify. Now you will see this green screen that says Signed successfully and you will be redirected back to the Zerodha screen. Click on Finish and we are done. Congratulations, you have completed your account opening process. Even if you face any issues while registering, then don't worry. Just call the Zerodha team, they'll get in touch with you and help you complete this process. Alright, so now that your account opening is done, it's time for the most exciting part, the KITE tutorial. Within 24 to 48 hours after you've completed your account opening process, you will get a mail like this from Zerodha, which will have your KITE user ID and password link. If you have used the link in the description to open your Zerodha account, as we discussed earlier, then at this point, the Zerodha team will also send you these 7 trading and investment courses that I showed you earlier. Now click on that password link in that mail and set your credentials. Then go to Play Store and install the KITE app. I already have it on my mobile, so I'll hit on Open and Login. Enter your user ID and password that you've just set and then enter your PIN. So as you know, I'm a software engineer, which is why I made extra efforts to understand this software that I'm using to invest my money. So for the next few minutes, I'm going to show you everything I've researched, what features about it I like best, and how I use KITE. As you can see, as soon as you log in, you will see a screen called Market Watch, in which you'll have 5 lists, watch list 1, 2, 3, 4 and 5. Basically, you can just add companies here that you want to keep tracking. Let's assume I want to track ITC shares on NSE. So I'll search for ITC and click on this plus button. As you can see, it's now added to my watch list. The beauty of having 5 different watch lists is that you can maintain different watch lists for different kinds of companies. For example, one to track indexes, one to track blue chip companies, fintech companies, etc. You can even rename them. I'm renaming this to My First Stocks. I can even add other companies to this like Infi, Wipro, TCS. You can add up to 50 per watch list. To simplify this demo, let's keep ITC and delete the rest. Just press and hold on any of them and you will see this edit watch list screen. You can modify the list here and then hit save. Now when I click on ITC, this window pops up. Important things to note here are the last traded price. This tells us how much the stock is trading at this very moment. Percentage change tells you how much percentage or points this last traded price is varying from the previous day's close. If it's better than the previous day, then it will be in positive. If it's worse, then it will be in negative. Here you can buy, sell and create GTT. I'll show you how to use these in a few minutes. On the left hand side, you will see view chart. By clicking on it, you can invoke charts and even choose the style that you like. Coming back. Here you can see the open, high, low and close values. This tells you at what price the stock closed the previous day, at what price the stock opened and what's the highest and lowest the stock price went during the day. And volume gives you a sense of how many shares are being traded at a particular point in time. So as you can see, the last traded price of ITC is around 196, which keeps fluctuating depending on the trades that are happening currently. Its previous day close is at 202.10. It opened at 206. The highest price and the lowest price at which the stock traded for the day is 209.4 and 195.55 respectively. This is market depth, which shows bid price and ask price. Now what are these? If you're buying a share, obviously you will buy from a seller. So the price that the seller asks you is called the ask price and is in red. Similarly, buyers will also buy shares at a price they think is fair. So the price the buyer demands is called bid price and is in blue. So if you place a market order to buy, which I'll show you how in a few minutes, then you will buy the shares at the lowest ask price available by a seller. A very important thing to notice here is this snap quote window. Normally here you can only see the top 5 buyer and seller contracts. But because of this new Zerodha feature called the 20 market depth or level 3 data, you can see the last 20 contracts instead of just 5. This is great because now that you can see up to 20 bid prices and ask prices, it helps you identify better price points at which you can trade. If you're not understanding the concept of market depth yet, it's okay. You will get used to it as and when you start using the platform. Now, when you scroll down, you can see various other apps that are integrated with Zerodha. I like this fundamentals widget where you can see a quick overview of the company, events and news related to it. This can help you with your fundamental analysis a little bit when you want to do long-term investments. Now at the very bottom is this cute little feature called Pin to Overview. Normally at the top of your market watch, you will find Nifty 50 and Nifty Bank indexes. But if you want, you can replace them with your favorite stocks. Let's assume you want to put ITC here. Just go to Pin to Overview and pick a spot, 1 or 2. I picked 2 and as you can see, it will be pinned right at the top. Now it's time to check out the buy button. Alright, brace yourself. Once you click on it, you will see quantity, which is the number of shares you want to buy. The price that gets loaded here automatically was the last traded price at that moment. CNC means cash and carry. When you select this, you are telling your broker that you want to hold these shares with you for multiple days, months, years, and those shares should be held in your DEMAT account. So this option is used for long-term investments. MIS means margin intraday square off. You choose this option if you want to do intraday trading. Traders use this with the intention of making a profit by buying the stocks at a low cost and selling for more on the same day. Next comes order type. As you can see, there are 4 options: market, limit, stop loss and stop loss market. You choose market if you are ready to buy the share at whatever market price it's available at right now. As you can see, the price that's automatically loaded here is 196. But if you place the order and at the same time the market price goes up to say 200 rupees, then you will buy ITC at 200 and not 196. Which means when you place a market order, you can never be sure of at what price you will undergo a transaction. But frankly, these small market changes will hardly matter when you're doing long-term investments. Next option is limit. You can place a limit order when you're particular about the price you want to buy the stock at. As you can see, the last traded price of ITC is around 196. But suppose you want to buy this stock only at 190 rupees. So for that, here you can enter 190 and place a limit order. The problem is, if the market price does not fall to 190 or below, then you will not get these shares. Don't worry, I'll show you what happens to your money if you place a limit order and it doesn't get executed in a few minutes. Next is stop loss limit order. This type of order can protect you especially when you're doing intraday trading. When you hold a particular stock, you might fear that losses might happen if the price starts moving against you. So the order you place to limit such a loss is called stop loss order. Let me explain. Let's assume that you have bought ITC at rupees 195 with an expectation that it will hit rupees 220 in the near future. But instead, what if the price of ITC starts going down? To protect yourself, you first need to decide what is the worst possible loss you are willing to take. Let's assume from 195, the max you can risk is 190, which is a loss of 5 rupees. So by placing a stop loss order, you are telling the broker that if the price hits 190, you want to sell and exit this loss making position. But if the price remains above 190, then this stop loss order will remain inactive and nothing will happen. So stop loss order is a passive order and we need a trigger price to activate it. Trigger price for a sell is usually a little above the stop loss price and acts as a threshold. So for this scenario, the trigger point can be set at say 191 rupees. So if the market price goes down from 195 to 191, then this stop loss order gets triggered and hits the exchange, and you will exit by the time it reaches 190. Stop loss is a very versatile option. Suppose intraday traders were expecting a price to go up, then they use SL triggers to sell off in case the price starts going down below the current market price. But if traders were expecting a price to go down, they use the same SL triggers to enter a fresh buy in case the price starts going up above the current market price. I know it is a little confusing at first, but watch this section one more time. And if you have any doubts about SL, you can comment and ask me. But be rest assured, you will understand all of these options once you play around with the platform a little bit. Next option is stop loss market, which is same as stop loss. Only difference is that instead of setting a limit, you will buy or sell at market price. Your chances of execution are higher if you place a stop loss market order instead of a stop loss order. Next, you will see these two options when you choose CNC, set stop loss and set target, which are GTT options. I'll explain what these are when I explain GTT in a few minutes. Let's move to variety. First, we have regular orders. They come with a time validity. Day means the order is valid till the end of the day. It is selected by default. IOC, immediate or cancel, means that if the order is not immediately completed as soon as you place it, it will be cancelled. Next, we have bracket order. This is a very interesting option. You can use bracket order when you want to enter a trade along with a target order and a stop loss order. The target order ensures that as soon as the market price reaches your target trigger, your shares will be sold and you'll earn a profit. And the stop loss order ensures that if the market price goes below your stop loss trigger, your shares will be sold and you will get out of that loss making position. So basically, you are entering a trade within a bracket that this is the maximum I want to earn and this is the maximum I am willing to lose. Let's see this with an example. Let's assume that you're placing a limit order for ITC at 195 and you're not ready to lose more than 10 points, that is till 185 rupees on this trade. So you put 10 in stop loss. This defines the lower end of your bracket. Next, in target, you need to put the maximum number you are expecting to gain on this trade. Let's say you are expecting that it will go up by 15 points till 210 rupees. And when it does, you want to sell it off. So enter 15 in target. This defines the higher end of your bracket. And I am putting 1 in trailing stop loss. It means that if the market price of ITC goes up by 1 point from 195 to 196, then the stop loss, that is the lower end of your bracket that I've currently set at 185, also moves up by 1 point to 186. As you can see, BO is designed to provide you increased protection and to ensure that no profit position turns into a loss. Basically, with BO, you are entering the market with 3 orders. As soon as the main limit order is executed, the system will place 2 more orders, profit taking and stop loss. When one of the 2 orders, that is profit taking or stop loss, gets executed, the other order will get cancelled automatically. Next, we have cover order. Zerodha as a platform gives you more leverage, which is why it would want you to reduce your risk. Hence, a cover order is an order that is placed with a compulsory stop loss. This inculcates discipline in a way, because when you place a separate stop loss order, like we discussed earlier in the stop loss section, you are most likely to cancel it, because even if it goes further down, you will feel like taking a risk. But with cover order, you have to place a compulsory stop loss order that cannot be cancelled. Of course, this stop loss can be modified, but only within the range of 1.5% and not below that. This way, you are limiting your losses. Important things to note about cover order are these. If you place a cover order with market order, then both the market order and the stop loss order are placed simultaneously. But if you place it with a limit order, then stop loss is placed only when the market reaches the limit you have set. Next, we have AMO, after market order. With this, you can place orders for the next trading day, the previous day itself. For equity, AMO can be typically placed between 3:45 p.m. to 8:59 p.m. And finally, disclose quantity allows you to disclose on the market screen only a part of the actual quantity you buy or sell. Suppose you're buying 200 shares and only want 100 disclosed, then you can use it. So I think we've covered most of the options. Now before we buy or sell, let's also understand this new feature called GTT. GTT stands for Good Till Triggered Orders. This option is used for delivery, that is to buy stocks for investment in future. See, at the end of every trading day, all the orders you've placed on the exchange get cancelled if they are not met. But with this new GTT feature, you can place an order to buy a stock after say 1 month, 2 months, 3 months, whenever the price falls down to a certain amount that is favorable to you. Let me explain. The current price of ITC is around 196. But I want to buy 10 shares of ITC only when the price drops to 180. Doesn't matter when it happens. So I will place a trigger price of 181. So that this GTT order gets activated when the market price hits 181. And by the time it reaches 180, I get my 10 shares. Similarly, let's assume you have 10 ITC shares in your DEMAT account and you want to sell them in future whenever it reaches a certain high. So currently the price of ITC is around 196. Let's select sell, single trigger. And I'm assuming that the highest this price will go is till 270. And when it does, I want to sell the 10 shares that I have and make a profit. So to activate this order, I'll set a trigger at say 265. So this order gets triggered and reaches the exchange once the market price hits 265. And at 270, my shares will be sold. So those were single triggers. Next we have OCO. One cancels the other trigger. Using this, you can set both stop loss and target trigger. When either of the triggers is hit, the order is placed at the exchange and the other trigger is cancelled. For example, the current price of ITC is around 196. But if ITC hits a low of say 160, then I want to sell it off and exit. So I am setting my SL trigger at 162. If the market price goes down and hits 162, then my SL order gets activated. And by the time the price goes further down till 160, it will be executed. Similarly, if the market price hits a high of let's say 270, then I want to sell it off to make a profit. So I'll put a trigger price of say 265. Now if the market price is rising and hits this trigger price, then this sell order reaches the exchange. And at 270, my order will be executed, making it a profit booking. Now before you place a GTT, know this. Your trigger will be valid for 1 year and is valid only once. So if your order is triggered and not executed for whatever reason, then the GTT order needs to be placed again. If you place a GTT buy order and your limit price is met, then your order will be placed and executed only if you have enough funds in your trading account. And finally, if you place a GTT sell order, then it will be executed only if you have those stocks in your DEMAT account and if your limit price is met. Awake? I know, those were a lot of options. But if you've gotten this far, then good job. Now, when you see how to buy and sell shares, things will slowly fall into place. So just for this demo, let's suppose I want to buy one stock of ITC. The first thing you need to do is add funds. Go to this account tab at the farthest end, click on this option called funds and let's add say $1000. You can choose the payment option you like the best, UPI, Google Pay or net banking. I am using Google Pay. After you've added funds here, it will reflect in some time. You can even withdraw the amount and it will directly go to your bank account. Now let's do some buying. Go back to the watch list, click on ITC and invoke the buy order form. So I want to buy 2 shares of ITC. I'll select MIS for intraday trading. I want to buy at whatever market price it's available at. I'm choosing regular and day trade for validity. And that's it. Slide right to buy. And as you can see, the order is executed. Now you can go to your orders tab and check the list of your executed orders for the day. You can even find them under positions in your portfolio tab. Now let's go back and say instead of a market order, I want to place a limit order at a price of 192 and then hit buy. As you can see in the orders tab, the trade is in pending section and it will remain there until the market price reaches the limit price that you have set. Now while it is here in pending, I can even cancel this order. So that was buying. Let's assume I now want to sell off these 2 ITC shares that I've just bought. I'll directly go to positions in the portfolio tab, select those ITC shares and hit exit. Check out the options carefully in that sell order form. I want to sell them at whatever market price is available right now. And then I slide the sell button. And that's it. I've sold my 2 ITC shares. Now to check out the list of your orders you have made for the day, go to the orders tab. As you can see, we just bought 2 shares at market price, cancelled 1 limit order and sold 2 at market price. Just like this, when you are checking out the platform, you can try out the other options that we have discussed and see how they work. And that's it. Congratulations, you've just made your first trade. You can buy and sell anytime between 9:15 AM to 3:30 PM on market days because that's when the equity trading window is usually open. But remember, by the end of the market hours, all your intraday positions will be automatically squared off by Zerodha, usually 10 minutes before the market closes. So keep a track of time and close all of your intraday positions before that. But a word of caution. While you're getting used to trading and investment in the stock market, I would highly recommend that you go through the KITE's user manual and those 7 trading and investment courses that we discussed earlier. This is because the more you learn, the better you get at choosing the right investment. So that was trading. But what if you found a good company and want to hold the stocks for more than a day, weeks or years? Then go to Market Watch, select that company, click on buy and here instead of choosing MIS, select CNC. I'm going to place a market order. I'm choosing regular and sliding the button to make a buy. As you can see, the trade is reflected in my orders tab and in my portfolio tab. After settlement, which is T plus 2 days, this share that you just bought will start reflecting in your holdings tab. So in your holdings tab, you can view all of your investments. That is all the stocks you're holding in your DEMAT account currently. And in your positions tab, you can see all the trades you have made for the day. And finally, let's place a GTT order and see how that works. Let's go back to my market watch. Select ITC and click on Create GTT. As we discussed earlier, we use GTT to place orders for the future. So I want to buy 10 shares of ITC if and when the price goes down to 180. So I'll put a trigger at 181 so that this GTT order gets triggered once 181 is hit, and I'll slide this Create GTT button. If you want to see the status of all of your GTT orders, go back to your orders tab and check the GTT section. And this is where you can see the details of all the GTT orders you've placed. Currently, you can place a maximum of 50 active GTT orders. So using the KITE terminal is that simple. I have showed the entire buying and selling on mobile, but you can even do it on your desktop. If you're interested to know more about finance, subscribe to my channel and hit that bell icon. I'm also building a finance for beginners course, which will include the basics of mutual funds, stock market, fundamental analysis, index funds, etc. that I have learned from experience and some other industry experts. I will release it if I get enough requests. So if you want that course, then fill the Google form. Its link is in the description. And I will send you the course for free whenever it gets released. I've said this before and I'll say this again. As the investment guru Warren Buffett has said, stock market is a device for transferring money from the impatient to the patient. And he cannot be more right. So understand this. Stock market is not a profit and loss statement. In fact, just like life, stock market is also a combination of small decisions, right or wrong, that will teach you how to choose good companies. What matters is that you enjoy the process. So today's bonus tip is this. Start small. Invest 100 rupees today, 500 rupees next week, and learn how to use the platform first. Please don't invest huge amounts on your first day. You can take advices from everybody, stockbrokers, experts, but in the end, you are the only one responsible for your stock market decisions. So learn, practice, gain experience, because that is the only way to generate long-term wealth. On that note, you go and learn more about stock market. And I'll go and work on my next video. I promise to see you again very soon. Until then, keep fighting the urban fight to be financially fit. Hey guys, I hope you found that video useful. Before I leave, I just wanted to remind you two things. Number one, open your Zerodha DEMAT account. And number two, fill out the Google form to get that Finance for Beginners course from me. The links for both of them are in the description. Bye.